Well, good morning, everyone. My name is Roger Scott. I'm the head trader for Wealth Press. Today is July 20th. Yes, July is two-thirds done. And again, I feel like the year just began. Today's a cool day. Today's my daughter's 16th birthday. I have three kids, and my middle one is 16 years old today. I swear to you, I remember when she was born, it felt like yesterday. So today's Monday. We got a big week ahead. Let me give you a good little preview of what to expect, what to watch out for, and some sectors and stocks that you need to pay attention to right now. So global shares were mixed Monday as the number of COVID-19 cases soared in the U.S., and investors cautioned eye on summit on the European leaders discussing a fund to help economy grow. This COVID-19 just doesn't want to go away. Talks between Europe leaders failed to reach an agreement on 1.8 trillion euro or 2.1 trillion EU budget and COVID-19 recovery fund to tackle the crisis. They were meeting again on Monday, and they're not agreeing this morning as well. Corporate earnings and U.S. unemployment data are expected to draw attention this week. We had bank stocks come out last week. They were okay. They were slightly better than expected. Wells Fargo really aided, but for the most part, the numbers were slightly better than the revisions. But remember, these revisions take into account everything the market has experienced over the past two quarters now. It's now, February, March, April, May, June, July. Yeah, almost 2 quarters. So again, that's taking into account everything that we know right now. Now, this week we move into the technology sector. In terms of the technology sector, last quarter we had 3.8% positive numbers on 4% positive revenue. This quarter we're expecting, write this down, this is important, negative 12.7% on 1% negative revenue. If the number's better than 12.7% overall, and I think it may be, either the revenue or the number or the percentage gain or loss at least, we may see a little rally. But again, negative 12.7%, and that's already revised lower the second time. So keep your eye out on that number, negative 12.7% and negative 1% revenue. If the number's better, we may see some upside. Now, Japan reported trade data showing exports fell 26% in June from a year earlier. That's huge. Its trade-reliant economy has plunged into a recession, and its outbreak of COVID-19 cases, while still fewer than the hardest hit nations, have been growing, especially in Tokyo. And remember, Tokyo is the big capital, is where the money comes from. You know, when a small city gets hit, that's one thing. But when a big part of the country gets hit, where there's a lot of economic decision-making, that's a problem. Signs that the outbreak of the COVID-19 has spread to a second city in northwest China, Xinjiang, even as authorities close off communities and impose travel restrictions in the regional capital after darkened the mood. India, a new record surge of 40,000 cases. In the past 24 hours took the nation's cumulative total to more than 1.1 million. And they've had 681 deaths. This is not going to be good for imports or exports. Now, looking ahead this week, we're starting off the week fairly light. We're going to let the markets trade on their own. Earnings is going to be the biggest factor. I'll tell you which earnings to expect in a few minutes. Midweek, we got existing home sales. This is really big. We've been seeing higher mortgage applications, and we've been seeing a higher home selling rate. As a matter of fact, home selling stocks, home builders are doing really, really well right now. I'm going to do a little report on it later this week. Make sure you don't miss it. But Lennar Homes, KB Homes, they're doing really, really well right now. So watch out for the existing home sales report. I don't think the petroleum report is going to be anything major. There's just so much supply out there. It's ridiculous. We got the jobless claim. Again, the major factor is to look below the moving average, the 4-week moving average. It's been around the 1.4 million. Now it's 1.37. Any number that's in the ballpark of 1.35 million new cases, new unemployment claims, anything below 1.4 million, 1.35 is positive. The key is to make sure this 4-week moving average keeps going lower. It was at 1.5 million. Now it's at 1.375. Hopefully we can get it down to 1 million over the next 6 months. Now, we also have new home sales. So we had existing home sales and new home sales. Keep your eye out on this report. Why? Well, if home sales rally, that means manufacturing rallies. That means materials, basic materials rallies. That means the economy starts growing once again. Because when people buy homes, when they refinance homes, they have to buy stuff that goes into the homes. They have to repaint their homes. They have to do upgrades. They have to do projects. All of these things grow the economy. So those are the biggest reports for this week. Now, speaking of basic materials, over the last month, I wanted to show you this. Over the last month, technology has not been the one that's gaining. It has been basic materials. Look at this, up 9.96%. That's quite a bit, right? Not bad, right? Almost 10% in the last month. Now, if you look at the sector as a whole, we've got a nice little ascending triangle going on here. Look at this. The price is almost at new highs. On a long-term basis, it's doing really, really well. We've got a nice little triangle here. We've recovered everything or almost everything. We're almost near all-time highs. All-time highs are around 64. We're at 61 level right now. And the short-term trend, as you can see here, this is 3 months. Look at this. What I like to see, a nice little congestion pattern around the 200-day moving average. The 50-day is now crossing back above. That's a bullish sign. That's a bullish cross sign. And we're now coming out of this congestion. I like these round top congestions with a short-term basing. That looks really, really good. Now, let's look at some constituents, all right? So we could find some good, strong stocks. As a matter of fact, let's find some really good ones in here. Sherwin-Williams. We're going to take a look at that in a minute. I'll bet you it's doing really, really well right now. Let's take a look at this. SHW. I like that stock. I was looking at that stock over the weekend, actually. It's one of the stocks that I've been talking about. Look at this stock. Nice little base breakout. Congestion. This is 3 month. Let's look at 9 month. Oh yeah, look at that. Let's look at 2 years. This is a nice stock right now. I really like this stock. It's been basing. The cross came already. We're now just going higher a little bit. Look at this base. We're making a multi-year high right now. As a matter of fact, we're making an all-time high. On a basic material stock, a paint stock. Sherwin-Williams is a paint stock. This is what I was just talking about. If basic materials goes up, and if home sales goes up, and mortgage applications are higher because interest rates are not going higher till 2022, the Fed already said it, you've got some upside in these stocks. SHW is a really good stock. I would look to buy right around the 614 level, right around the current level. And I would put a liquidation stop right at the 575 area. And if you're trading options, let me give you a couple of good option picks. And remember, you're trading the option as a proxy for the stock. So when you buy the stock, you buy the option. When you liquidate the stock, you liquidate the option. We don't put stop losses on the option. That's a beginner's play. So let's look at an option that has 63 days till expiration. Open interest is fine. There's nothing major there. 610 strike price. Ooh, pretty expensive, but hey, better than paying $600. You're going to pay about $30, maybe 620, about $25 a share. Implied volatility is not that high right now. If you want to go a little closer, you can, but you got 35 days left here. I wouldn't play that game. It's too risky. And the premium's only about 5-10 points lower. So I would actually go for the other one. I would actually go for the expiration, the 9/18 monthly expiration. Open interest is really good. Volume is reasonable. You're not going to get too screwed here on the bid and offer. You're going to have to work this order. I mean, you will have to work this order. But you can go all the way to the 610. The spread is like $1 here. It's not that bad. But I really like this stock, and I really like this option right now. And there's a few others. Let me go to the constituents on ticker symbols XLB here. Let me see if I could find another one for you. But I really like this ticker symbol materials, and I like the constituents. So again, let's go to the constituents. Let's see. I'm trying to remember another one that I looked at. APD, that's the other one. Look at this thing. Oh, yeah. These stocks are rising right now. Oh, look at this. I would wait for a pullback on this one. I would probably wait for a pullback to the 260 level, maybe even a little lower to the 245 level, but I think it's a bit overdone right now. Yeah. So I would wait for a pullback. But the point is, you could see that the basic materials sector is hot right now. And APD stock and Sherwin-Williams stock, SHW, look really good. Sherwin-Williams I like right now. The other stock, APD, I think needs to cool off a little bit. But again, I really like basic materials right now. And keep your eye on tech earnings this week. And keep your eye also on the overall market and see how it does with the new home sales. Existing home sales on Wednesday, new home sales on Friday. If those two reports confirm what I'm seeing with mortgage applications, and I think we will, because they go hand in hand, we're going to see basic materials rally again. And if we may see some profit taking or some downside on technology, which has been leading, and we may see some upside on basic materials, production stocks, things that cause the economy to rise initially. Let me give you a couple of other sectors that may be rising. Financials, no, but industrial. Look for industrial, look for consumer staples, and materials. Those three go together. And by the way, those are all three very conservative sectors. They tend to go up when technology and speculative stocks like consumer discretionary and technology weaken out. So keep your eye for that to happen this week. Technology to cool off, basic material, consumer staples, industrial stocks to begin picking up. Now, most of you don't know this, but one well-known federal government agency created a loophole. That's right, within a certain sector of the market, a sector that's been known to create what seems like overnight billionaires. That's a billionaire with a B, okay? Folks on the inside have exploited it over and over and over and over again to get in front of the predictable stock explosions. You got to get in on this. And for the first time ever, you can too. Get ahead of the line, all right? Click on the link below to discover how you can spot these secret time windows yourself. Overnight billionaire, folks. Predictable stock explosions. Giving you a loophole, all right? I mean, think about it. This is your time to shine. Follow the link below. Gain an unfair advantage now. Talk soon. Most important, have a great week ahead. Bye, everyone.